Hello and welcome to this session on how to trade Forex. And I'm bringing it to you live and direct due to the popular demand for this particular session. Many people have been contacting me that we should do this, and that is why I decided to do this today. So, and this is going to be on for a while because I'm going to do this training from the beginning to the advance on everything that you need to know in forex trading for you to become successful in forex trading. And if you are out there that you need a side hustle, okay, or you are looking for multiple stream of income or additional stream of income, this is for you. So in this training, like I said, it's going to be a series, and which is going to be divided into different sessions, like 3 sessions. And the first session is going to be for those that are completely new to forex trading. Okay. While the second session is going to be an intermediate level or an intermediate level for those that have had little experience before, but they are still, yet to be able to find their feet in forex trading. That is, you are yet to be profitable. While the last session, which is going to be the advanced level, it's going to, that will be the major thing where we're going to be doing the real thing, the real analysis. Okay, so for those 3 sessions, I will advise you not to miss any of them. So now, let's get started. So now, like I said, this is going to be the introductory part of it. And if you are completely new, I would like to run you through some process that will make it to have the perfect understanding of what we're about to do. So now, what is Forex? What is Forex? I know you might have been, hearing about Forex trading, and you have picked up interest in it, but you don't really know what it's all about. You don't really have much information about it, and that is why you are here to get all the knowledge and information that you need for you to kickstart your forex journey. So you might be thinking, what is this forex all about, or what is forex trading all about? Forex or forex trading, I will pick them one after the other, from forex to forex trading to forex market and so on, so that you'll be able to have a perfect understanding of what we are talking about. So forex, simply means foreign exchange. Okay, it simply means foreign exchange. That is, exchanging one currency for another. And this forex trading, it is the world's largest, most liquid financial market with trillions of dollars traded daily. Okay, so what we do there is just for us to exchange currency. That is what it's all about. Now, what is forex market? You've had the idea of what forex is all about. Forex is just, like I said, it's just about foreign exchange, changing of currency from one to another, changing one currency to another. Like for example, you want to travel, you are in a particular country, you are going to another country. You have the currency of the country where you are residing in. Then you need to get the currency of the country you are traveling to. It's just as simple as that. You take the currency of the country where you reside to people that have the currency of the country you are traveling to, then you exchange, your currency to the place where you are traveling to. It's just as simple as that. That's what Forex is all about. Now, what is Forex market? If we are talking about Forex, our major business here is to do Forex trading. There is no trade without a market. You need to trade in a market. So now, what is Forex market? So Forex market is a global marketplace for trading currency, a platform or a platform where currencies are traded. That is what we call Forex market. But in this case now, in this scenario, our market is online. Okay, there is no physical geographical location where this is done. It is a centralized marketplace where anybody could go to exchange currency based on your knowledge. Okay, based on the knowledge you have concerning forex trading. You go to the marketplace, you exchange your currency, you buy or you sell. That is it. So the forex market is a global marketplace for trading currency, and it is online. It is online, not it's not a physical market. Okay, the trading is online, and that is what gives you and I the opportunity to play in this market. That's what gives us an opportunity to participate in this market. Okay, because it has been brought online. Unlike before, where you have trading houses, exchange houses, and all that, where you have to go to before you can do business, foreign exchange business. But now, with the emergence of internet and technology, it is now online, where you and I could sit at the comfort of our houses and do this business. So the forex market is simply online. Now, what is forex trading itself? We have, I've talked about what forex is all about. That is, forex is just foreign exchange of currencies from one form to another. And I've talked about forex markets. That is a platform where you do the exchange of currency. And remember, while I was talking, I said there is no trade without a market. So now, when you are talking about forex trading, what does it mean? So in forex trading, okay, is the art of buying and selling of one currency in exchange for another. Okay, that is a forex trader. They speculate on the price movement of the currency pairs to make a profit. That is, you take your currency to a market, and the market in this scenario now is online. A platform that has been created online where you take your currency to buy or to sell, where you go to rather to buy or sell currency. So forex trading is simply an art of buying and selling of one currency in exchange for another. Okay, online. I need to emphasize that online. So you go there, you speculate, you speculate, you forecast the price movements. Okay, before you could make your decision on buying or selling particular currency. So having said that, So the underlying business in forex markets, that is the business that we do in forex market, is just to sell currency. Okay, I mean forex trading rather is to sell currency, buy and sell currency. Now, who are the key players in the foreign exchange market? Who are the key players? Who are the people that are involved in foreign exchange markets? Because you need to have all this understanding. You know, there is something that they always say that the business you don't understand, you don't invest in it. And you need to understand this perfectly, because forex trading is a very risky business that you can lose all your hard-earned money if care is not taken. If you don't have proper knowledge, you don't have the understanding of what is going on there, you can lose all your savings on this. It's a very risky business that you need to have perfect understanding, and that is why I'm taking my time to explain all this. So now, before you could, play in this market or do this business, you need to have the understanding of who are the people that are involved, who are the players in this markets. Okay, who are the people that are involved? You are one of them. Who are the other people that are involved? Who are you selling to? Who are you buying from? You need to have that perfect understanding, because that will shape your understanding of what you're going to be doing in the future, which I'm still going to explain in the future. Okay, so the people that are involved in this forex trading, they are the financial institutions. And who are these people? They are the commercial banks, the central banks of countries. They are the money manager, the hedge funds. So they are the major players in this industry, this forex industry. The commercial banks, all the banks in the world, they all play in this industry. They all trade forex. The central banks of countries, they all trade forex. Okay, the money manager, the hedge funds. There are some people we call hedge funds. Okay, these are the people that are involved in this business. So it's not just a business that that doesn't have regulations. So this industry or this industry is well regulated. Okay, you could imagine an industry where the commercial banks, the central banks are involved in. So it's a well regulated industry. Okay, and these are the people that are involved that determine the exchange rates, the movements of the prices and all that. So these are the people, the key people that determines all that. Then who are the other players? Okay, who are the other players in the forex market? The other players in the forex market include the retail traders. The retail traders, like you and I now, we are the retail traders. The hedge fund managers, they are the big boys, that have so much money to move the market. The commercial banks, they are the big institutions. Central banks, they are the big institutions that have so much money to move the market. But those are the people that really matters when it comes to forex industry. But the other players are you and I that also go into this market to make some little to make money from this little movement and all that. We are not as important as those institutions that I mentioned earlier. So retail traders, you and I, we are the retail traders that will just go into the market to make some little change, that happen in the market. Because if you think you are making so much, maybe you are making $500, $1,000, it cannot be compared to what the hedge funds managers, the institutions are making. They make their own money in millions and billions. Okay, unlike what you are just making $500, $300, $1,000, $5,000, and so it could not be compared. So your own money, the money you put into the forex market is not as important. Okay, like what the institutions are putting. If you put your own money, market doesn't feel it. But when those people put their own money, market feel it. They are the market movers. Okay, that is why we call them the key players. But you and I, as a retail traders, we are not, we are just there to make some money there in the market. Then others are the retail brokers. The retail brokers, they are the one that gave us the leverage. You and I, the retail traders, the leverage for us to be able to play in this market. Because for you to play in this market, you actually need so much money. And that is why a lot of people were unable to do it before the emergence of technologies and the retail brokers. So they are the one that help us, they are the one we, the retail traders, are leveraging on for us to be able to play in this market. Okay, so they serve as a buffer or intermediary between the forex market and we, the retail traders. So they are also as important, okay, because without them, you and I could not involve in this. So the proprietary trading firms, this is another key player, in the forex market. So the proprietary trading firm that we usually call prop firms. These are the people, they are the institutions or companies that give you money to trade. If you are able to pass their challenges, because you're able to prove to them that you can trade, they will give you some money to trade and all that. Like the retail brokers, they are the ones that serve as intermediary between you and the forex market. They also give you leverage, for you to be able to trade. But like, for example, now if you have $100 now, your $100 might not be able to do anything in the market without their help. So they give you leverage. You have $100, they can give you additional money for you to be able to, play in this market. So those are things that retail brokers are doing. And also the proprietary firm. Okay, so those are the key players in the forex market. So now, what are the basic terminologies that you need to understand, as a beginner trade forex trader? So in trading, there are some terminologies that you need to understand, and these are the terminologies that you'll be hearing, while you are playing in this market, in this industry. And so number one of them is PEEP. PEEP, there is something we call PEEP. So it's an acronym for percentage in points. And all this will be seen by the time we get to the intermediate level and the advanced level. All these things I'm going to show you how they are on the platform, on the chart system. But let's just continue with this elementary stage. So you need to understand what a PEEP is. Okay, it is the smaller units of price movements in forex trading. Forex moves in prices, whether the price is moving up or it's moving or it's coming down. So those are the things that is happening or that happens in the forex market. Price movement, either it's moving up or it's moving or it's coming down. So when it's moving up, you buy. When it's coming down, you sell. So it moves in pips. And the PEEP is usually equal to 0. A PEEP is usually equals to 0.001. That is in the 4 decimal places, 0.001. So the last digit is what you focus on. That you call that one a point. So when it moves 10 times, that is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We call it a PEEP. Okay, so that is a PEEP. So this is the smaller unit of price movement. So we call this a PEEP. 0.0001 is a point, while 0.0010 is a PEEP. So you get to understand, just put it at the back of your mind that there is something called PEEP, which we use to calculate the price movement. So put it at the back of your mind. We'll be hearing that a lot, in forex trading. Then the next thing that you will be hearing, the basic terminology, other terminologies that you'll be hearing is leverage. Okay, you'll be hearing leverage. So leverage in forex trading is a measure of how much an investor can control with a given amount of capital. Okay, the amount that you can control. The amount, a measure of how much an investor can control with a given amount of capital, a given, it needs to underline the word given. Like I said earlier, you need so much money to play in forex markets, okay? But there are some people that are available, the brokers, the prop firms that are available to give you what is called leverage, okay? If you have $100, for example now, you need some leverages before you be able to participate. Your $100, let's say you have $10, your $10 might not be able to do much. If you have $100, even your $100 might not be able to do anything in forex markets. But with the help of leverage, you're able to do much. And how do I break this down now? Like, for example, if you want to, place a order for a particular currency pair, you might need as much as $100,000 before you're able to place an order. But where will you get that as a retail trader? But there are these people we call brokers, prop firms. They are able to give you money, but that money, we call them leverage. It's not a physical money. When you register with them, you give them your $100, but your $100 cannot do anything. But they will now add so much money to that your $100 for you to be able. It's just like they are borrowing you. Leverage is just like a borrowed money. They will borrow you that additional money to that your $100 for you to trade. Okay, when you trade with that money, if you make money, they will take back their own money. Like, for example, if you give them $100 to trade and you need to trade, place an order that worth $100. So that means they will give you 999 or thereabouts thousands before you're able to trade. So when you trade and make money, they take their own $999,000 and give you back your $100 with your profit, while they've taken their own money back. They will not release the money to you directly, but the money will be added to your account that you create with them. You use it to trade. When you make money, they take back their own. They will give you back your own. It's just like borrowed money. They borrow you for you to be able to. So you need leverage, because your little money, your $100, even $1,000, cannot do anything in the forex market. So you need the leverage from the brokers or the prop firm before you're able to, do anything in the forex market. So another terminology that you'll be hearing, is what is called margin. Okay, margin is one of the most important concepts to understand when it comes to forex trading. Margin is the minimum amount of money that a trader must have in their account to open a position. So there is a minimum certain amount you must have, in your account, which is the margin. Like, for example, if you want to place a trade worth of $10,000, for example, you must have a minimum amount, that amount in your account, that is $10,000. Okay, so you must have it in your account. That is what we call margin. So if you want to place a trade that worth $20,000, for example, so if the margin that you have with the additional money you borrow must be at least the minimum amount of that position you want to take. Okay, then the next terminology to be hearing is bid and ask price. The bid and ask, what is the bid price? What is the ask price? So the price that you see on your simulated trading platform is known as the bid price, and it represents the amount of currency that you will need to spend in order to purchase a certain amount of the other currency. Okay, so you have a bid price, you have a ask price. A bid price, like, for example, if you want to trade Euro USD, for example, Euro USD we have a bid price, while the foreign currency that you do at the other hand, we have what is called the ask price. you use for bid price to purchase or to either to buy or sell the other currency. Okay, so it's the amount of currency that you will receive in exchange for selling a certain amount of the other currency. Okay, like for example, now if you have a dollar like USD, let's say USD NGN, USD is $1 against NGN 1,700. That means your bid price is $1 to purchase 1,700 NGN. That is just bid price and house price. That is, you need $1 as the bid price to buy or sell 1,700 NGN currency. So that is bid and ask. That is, you need a certain amount of a particular currency to either buy or sell a certain amount of the other currency. And that will take us to what we call spread. That is the difference between the price at which you buy a currency, the bid price, and the price at which you sell. Okay, the little difference between the price that you use to sell the currency and the price that you buy, that is what we call spread. And that spread is usually added by the brokers. That is their own commission. Okay, the brokers that give you the platform for you to be able to trade. Like I said, the platform is online, and some people provided the platform, so they need to make money from it as well. So those are the brokers. The brokers are the ones that provided the platform for you and I to be able to trade. So the difference, they had little money to your bid and your ask price. So the difference between your bid and that ask price is what we call spread, which belongs to them, and that is what they use to run their platform. So another terminology that you'll be hearing is bull market. So a bull market is one in which all the prices rises. When prices are moving up, are going up, we call them bull markets. While bear markets, they are the one that the prices of the currencies are falling. So when the price of currencies are falling, or a particular currency pair is falling, we call it bear market. When it's going up, we call it bull. When it's coming down, we call it bear. When it's strong, when a particular currency is strong, we call it bull. When it is weak, we call it bear. Another terminology that you'll be hearing is lot size. Lot size, okay? The lot size is the number of units of currency that you buy or sell in a single trade. You use lot size, to determine the number of units that you're going to buy. Like for example, now you want to purchase a phone. For example, now you might say, okay, and I want to purchase 10, I want to purchase 20, I want to purchase 1. Okay, so in forex trading, so lot size is one that is used to determine how many positions, how many you use position or order you want to make. So it is done in lot sizes. And we have different lot sizes. We have mini lots, we have a standard lot, we have micro lots. Okay, so the standard lot is equals to 100,000 units of currency. The mini lot is equals to 10,000 units, while the micro lot is equals to 1,000 units of currency. Okay, so like I was saying earlier, if we need to get a standard lot, which is equal to 100,000 units of currency, where will you get money to do that? And that is where leverage comes in. That is where the brokers comes in. So you need so much money to buy all these things. Okay, so you make your order, or you place your order in forex trading based on lot sizes. In other words, the amount of units that you need to buy, like the example of phones that I gave the other time. So that is what a lot size is. You determine the number of units of currency that you want to buy using lot size. So other terminology that you'll be hearing is gap. Okay, gap. There is a term used in technical analysis that refers to the space between candlesticks on the candlestick chart. When you're on a chart, there is something we call gap. A price might gap up or gap down. When it gap up, that means the first candle, the second, and there is so much space between the first candle and the second candle. When it gap down, that means the gap up happens in bull markets, while gap down happens in the bear market. When it gap up, that means there is so much space in the price movement. Okay, there is a jump, there's so much space in price movement upside. When it gap down, that means there is so much space in the price movement, a rapid so much space in price movement between the first candle and the second candle, in the bear market. That is gap down. Like for example, now, price supposed to be moving in pips, 1 pip, 2 pips, 3 pips. When price rapidly moved from 2 pips to 10 pips, that is what we call a gap. Without going through the normal process of one normal counting of 1, 2, 3, 4 to 10. You just jump from 2 to 10. That is a gap. Or from 10 back to 2 or 10 back to 5. That is a gap. So all these things will be seen or hearing in forex industry. Then there is another one we call stop loss, which is very, very key and important. The stop loss is an order to sell a currency when it reaches a certain price in order to prevent further losses. In forex trading, there is always a profit and there is always a loss. So when you are making, when the price is running against you or the trade is running against you, you are losing money. You place a stop loss at a certain point that, okay, when I lose this so amount of money, I'm done. I want to sell the currency or I want to buy back the currency. I want to be out of the trade. Let me use that word. That when I lose up to this certain amount, I want to be out of the trade. Like for example, let's say you buy a house. You are a real estate person, you buy a house. Let's say you bought it $50,000, for example. Then in anticipation that, okay, the price of this real estate or house will go to $70,000, then I will sell it for me to make $20,000. But due to unforeseen circumstances, the price begin to fall. The property you bought for $50,000, the price began to fall and it became $45,000. People begin to price it $45,000. All before you know it, people begin to price it $42,000, $40,000. Now I say, okay, if I could not see anybody that would price this house higher, the moment they begin to price it as low as $40,000, I am done. I will sell it to whoever that comes at that time. Because you realize that every time they price the house, the price keeps coming down. You will now determine in your mind that, okay, if nobody is ready to go, instead of them going down and down and downward, when it reaches $40,000, I'm going to sell it. And that is what the stop loss is. You use it to prevent further losses. When trade is running against you, in trading, there are two things happen. This is how you make. So when you are making, there is a certain place that you say, okay, I'm done. This thing is running against me. This loss. Yes. You are making money. I've had enough profits. My target. When price move from 10 to 20, 20 is my target. I'm done. The same way that when you are losing, oh, this price is supposed to move from 10 to 20, but rather it's moving from 10, 9, 8. When it gets to 6, I'm done. So that is take profit and stop loss. And you'll be hearing of short positions. Short positions means sell. When you are hearing short positions, that means in forex trade, that means you are selling. Then when you are hearing long positions in forex trading, that means you are to buy. If I say we are long, we are going to go long, that means we are buying. If I say we are going to go long on Euro USD, that means we are buying Euro USD. If I say we're going to go short on Euro USD, that means we are selling Euro USD. So that those are the terminologies you'll be hearing. Another one is currency pair. You trade in currency pair, Euro USD. That's a pair. You have Euro as a currency of a country. You have USD as a currency of another country. When you join the two together, it becomes a currency pair. Individual currency, when they come together, they become pair. You trade the currency in pair. That is why we were talking about bid and ask price the other time. Okay, that is why we were talking about base currency and base currency and the other one. Okay, so the base currency in forex, okay, is the currency, the first currency in the pair, while the quote currency is the second currency. Like in Euro USD now, the base currency is the Euro, while the quote currency is the USD. So when you put two currency pair together, we call them, there is one, the first one is called base currency, while the second one is called quote currency. And you use the base currency use the base currency to bid for the quote currency. Remember, we talked about the bid and ask price the other time. So now we are talking about base currency and quote currency. Base currency is what you use to bid for the quote currency. And for example, the example I'm giving now is the Euro USD pair. Euro USD is the bid base currency, while the USD is the quote currency. So we've seen, we understand what a base currency is, and what quote currency is. Okay, so those are the basic terminologies that you'll be hearing in forex trading. Then the next thing that we're going to be talking about is trading platforms or software that we use. Remember, I mentioned earlier that this is all about online. It's an online business. You don't have a location where you do the trading. The trading is online. So there are some platforms that are being created that are available for you to do this. So one of the platforms is a software called MetaTrader. So they have MetaTrader 4 and they have MetaTrader 5. So you can pick any of these platforms. So I'll be explaining this in details later on in this series. So just put it at the back of your mind that before you could participate in forex trading, you need this software called MetaTrader 4. You go to Google Play to download it if you are an Android user, and if you are an Apple user, you go to iOS for you to download them. So you need to download this software. This is what we'll be using to place your trade. Then another one is TradingView. This is a chatting software that you use to do your chat. Both are used for chatting. So either you use MetaTrader 4 or 5, or you use TradingView. So these two software is very important. You need to download this on your phone or on your system for you to be able to, participate in forex market. So these are the platforms that we use, or software that we use in forex trading. Without MetaTrader 4 or 5 or TradingView, you cannot participate in forex trading. So without these two platforms that I'm showing you right now, MetaTrader 4 or 5 or TradingView, you cannot do anything in forex trading. So you need to get this installed on your laptop or on your phone. Okay, so these are the platform. Now I've talked about forex broker. That these are the people that serve as an intermediary between you as a retail trader and the forex market. Without a broker, you cannot participate in forex market. So you need to register with a broker. You know, these are the people that help you to use that you use their platform, that you leverage on their platform for you to participate or be able to make an order, place an order in forex market. So you need a broker for you to be able to, participate in the forex market. And we have many of them online that you can register with. So you need to register with a broking firm. It is through them that you participate in this industry. Okay. So now all those things that I've been talking about, they are the things that you need to know as a beginner trader. So if you don't have any idea about forex trading before, so you need to have a perfect understanding of all those things that I've been explaining. Okay, so you need a broker, you need to know the key players in this industry, you need to know the market, the software that you need to use, and so on. So you need to understand all those terminologies, the pips, the bid price, the ask price, the lot size, and so on and so forth. So you need to have perfect understanding of all those. But those are the things you'll be hearing, in the course of your trading journey. So I believe you have enjoyed this training so far, or this class so far, or this series, because the next one we'll be talking about. I'm going to stop here now, and the next time we'll be meeting, it's going to be we're going to continue with the intermediate level. Okay, where we'll be talking about more things. As an intermediate trader right now, you are no more a beginner. You have had the understanding of what trading or forex trading or forex industry is all about. So now, as an intermediate trader, now that you've had some little knowledge of forex trading, so now we go to the next phase or the next session now, which is intermediate trading, or as an intermediate trader, or the intermediate level in forex trading. So see you in the next class. Thank you. Bye-bye.